Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Markets have been trending in a range and taking supports right at the lower level of 15,700 levels. And though it's been swinging between 15,800 to 750 on the downside and 16,300, 16,400 on the upside. Though I've recorded a video and indicated that 16,450, 16,600 will be a crucial resistance zone, and markets might swing into those zone before taking out the trending move. But between that swings, there are few of the sectors which are coming back very strongly. There are few stocks which are coming back very strongly and heading with the bullish momentum. One such sector is auto space. Well, you might be thinking that why I'm indicating the auto space over here, because crude is trading above $110 mark, which is very negative, and it might continue to put pressure onto the auto space. Yes, you are right. Let's look at the first chart comparing with the US oil, which is crude oil, into the dollar terms against the auto space. So if you look at the chart over here, this is the again auto index on the above, which is the blue line. If you look at the lower panel, it is the US crude oil spot chart. Now, if you look at the momentum, yes, they are inverse in relationship, which means that when the crude oil prices go higher, it put pressure on the auto index. But the thing which I want to indicate over here is, let's start with the historical move. What happened in 2008? All the markets corrected, even equity index corrected, commodities corrected. We had recession sort of stuffs. Since then, when we saw a 2008 2009 recovery towards 2010, probably mid of 10, all the asset class have seen a huge uptick, be it equity or be it commodities. And yes, auto index has into the Indian indices witnessed a V-shaped recovery. Oil coming back from the lower levels, coming higher. But if you look at the 2011, which is most important, between 2011 to around 2014, look at the crude oil prices went into the consolidation zone. And at the same time, if you look at the auto index, which went higher and higher, indicating that after a rally into the crude oil, when crude oil goes into the consolidation zone, it is a time when auto index starts to outperform. And it was auto index for next between 2011 2014, one of the most outperforming sectoral index, which took even index like Nifty higher, comparing with the other benchmark indices. Now, back in 2000, if you look at right from between 2014 to 16, crude oil prices went lower. Auto index continued to outperform between 2014-15. It consolidated. Back in 2015-16, it rallied, went to the new all-time high. But since then, if you look at I guess auto was more majorly from a downtrend to the profit bookings, if you look at, and crude oil also traded in a range. But 2020, we saw a pandemic fall. There was a lockdown. Crude oil prices also went into the negative, into the futures. Auto index, or most of the equity index corrected. We saw a V-shaped recovery in all the asset class, be it commodity, equity. There was a V-shaped recovery into the auto space as well, crude oil prices as well. But if you look at 2021, when crude oil prices started heading higher and higher, right from around, I would say, it consolidated around $45-50, but when it crossed $55-60 mark, headed towards $100 mark, auto index was underperforming, and by huge margin it was consolidating in a range. But now I believe that the crude oil prices, the worst is over for inverse relationship. Look at the crude oil prices are now comfortably trending $110 mark. We are not seeing the bullish momentum continuing, but at the same time, I believe that if the crude oil prices, like we saw in 2011 to 2014, if goes into consolidation, probably it might head towards 120 $122 mark, back towards the 80 $85 mark. And at that point of time, I think auto index would be one of the sector index where you should push the pedal into an investment avenue. And This is not the parameter which I am looking at the only crude oil basket. But if you look at the auto index chart, let me show you the auto index chart over here. Now, if you look at the auto index chart, uh, if you look at the Nifty, if you look at the mid cap index, if you look at the small cap index, if you look at the CNX 500, which is the broader index, all of them have given a negative crossover, which means a death cross, which means that a 50 days exponential moving average or 50 days simple moving average, whatever you are following, goes below the long term average. The short term average goes below the long term average, which is the 200 period. Now, if I look at the 200 period, the exponential one, uh, into the auto space, that has not happened. So there is no death cross yet into the auto index. Though I would not say that the golden cross is very very bullish over here, but prices or the index is consolidating around the 250 exponential moving average, and both the average are converging at current point of time. But there is no death cross, which means that the structure is not yet bearish into it. Plus, if I look at the momentum, it's still very very bullish. If I look at the one chart which is more convincing me within line with crude oil, is the auto index divided by Nifty. Here I am using the ratio chart. So if you look at this third chart, this is the ratio chart of auto index divided by Nifty. And why I've taken this, because it helps to compare me the outperformance of auto index against the Nifty 50, which is the benchmark indices. Now, most importantly, if you look at the structure over here, Nifty, right from 18,600, we were back towards 16,000 levels now. And if you look at the same time, auto index has been outperforming. It is not breaching the downward range over here. And if you look at the recent chart over here, we have broken out of the multiple resistance zone. Plus, if I look at the bullish crossover onto the MACD, which is in the lower panel. So MACD is basically the momentum indicator, which helps you to identify the bullish momentum or the bearish momentum. Now, the positive crossover, which means that my the averages or the short term averages is taken over above the long term averages, which is very very bullish for the MACD as well. Plus, if you look at the green histogram over here, which is trading above the zero line, and again it is indicating that the bulls are still in control of the momentum at right now. So, with the crude oil prices, with the outperformance of auto index against the Nifty, it indicates that the structure is very very bullish for auto space over here. Now, if you look at the constituents of auto index, Maruti leads the index over here with 25% weightage, followed by M&M, which holds around 15% weightage, Bajaj Auto with around 10.74% weightage, Hero Moto with around 9% weightage, Tata Motors with 8% weightage, and the list continues on your screen over here. Let's deep dive into some of the stocks and look at what are the chart structure indicating onto the stock side. Uh, do they really mean that auto index could head higher? Because once the stock starts moving, auto index will automatically start moving. But if they are struggling to head higher, auto index will not outperform. Let's look at the first, which is the leader as Maruti. Now, if you look at the Maruti, prices are hovering around 50 and 200 days exponential moving average. If you look at again the bullish MACD, which is onto the lower panel on your screen, is indicating that the structure is very very bullish. As I said, the positive crossover, which means that the structure is very bullish. If I look at the Maruti 8200, might act as a resistance, which was the previous highs, but look at the recent momentum. It is forming a higher low structure, and when markets are trending in a range, if you look at the 1 week, the Maruti stock is gaining a strong upside momentum, so which again strengthens the auto index view, where the momentum is very very bullish. And uh, if I look at the recent structure, which is forming higher low structure, a bullish structure is in place as per the Dow theory. So Maruti, a 25% weighted stock, is indicating the bulls are in control of the stock. Second, if I look at over here is the M&M, which holds around 15% weightage. Look at the structure. It has given a massive range breakout, and it is one of the most outperforming autos stock, if I compare it with the auto index or even if the Nifty. This stock is gaining a strong momentum, and it has broken the multiple resistance. If you look at the previous highs over there, prices have broken the multiple resistance zone, plus the bullish crossover on MACD, plus the histogram indicating the structure is very very bullish. If I look at the Bajaj Auto, which holds around 11% weighted, 10.74 to be precise. Golden Cross, after the death cross, MACD positive crossover, histogram trending positive. Uh, Hero Moto, the next one. This is the one chart into the space where there is a death cross, which means that the short term average is below the long term average. But if you look at the prices in the recent times have come back very very strongly, and prices are now trending above the long term average. Above the long term average means that it is breaking the resistance zone, which is 200 exponential moving average. If you look at the orange line over there, plus multiple resistance has been taken out, the breakout from multiple resistance, which means that the highs are taken out and the bulls are coming back very very strongly. Again, MACD a positive crossover over there. Tata Motors, again a bullish structure over here. If you look at, though it is been hovering between 50 and 200 days exponential moving average, but if I look at the structure over there, the price action is resisting around 200. Once the 430, 450 is taken out, I think the momentum would be very fast and furious in the Tata Motors as well. Ashok Leyland, again multiple resistance breakout, bullish crossover on the MACD, and again look at the consolidation zone and the range breakout happening into the Ashok Leyland, which is very very bullish considering the structure. Look at the heavy vehicles like Tata Motors and Ashok Leyland, the product which they have, they are coming back very very strongly. So yes, commercial space, passenger vehicles, two-wheeler space, heavy vehicles, all are indicating the bullish structure is in place. TVS Motor, one of the again two-wheeler space. Look at the TVS Motors over here, coming back very very strongly. Breakout from the multiple resistance zone. MACD giving a positive crossover again indicates that the structure is well placed for auto index. So looking at these 7-8 stocks where most of the weightage has been covered, I believe that auto space is a right time to push the pedal, and we might see these stocks or the index heading very much higher in the coming weeks. Again, I'm not looking for probably a week or 2 weeks of trade, but I'm looking from second half of the 2022, where auto index could be one of the outperforming index. And as we are stepping into the June, this is the last month of the first quarter. I think this is the right time to enter into the auto space, and probably we might see second half very bright for the auto space. Be it commercial, be it passenger, be it two wheelers, be it heavy vehicles, all the charts are indicating that something is very very bullish onto the auto space. Signing off, Brijesh Bhatia.